Hi, everyone. Welcome to the latest Carson's Take 5. We've finally done it. The election looks like it is over. The time of Sonu and I recording this is Wednesday after the election, but we're titling this one, Sonu, We Have a New President. Which
Right.
could go either way because we were going to have a new president either way. I guess I'll just start high level. Obviously, a lot of people are happy. Obviously, a lot of people are not happy. It is not our job to kind of, go with too many feelings here. We're just going to go with some facts, right? We manage a lot of money. We're stewards of assets. Our job is to look at the facts, and the facts are we saw 4 years with President Trump before. Economy did pretty good. Stock market did really good, so we know that. But so let's kind of talk more about the next 4 years. I mean, believe me, we're all trying to figure out tomorrow. But, what are some of the things that you think he's going to do the same as he did before? Maybe something he does different, or just what are you on the lookout for the next 4 years here?
In some ways, you said it right. We have a new president, but it's kind of like we got 4 years of this before.
Right.
And I think the playbook is sort of similar. I think we get tax cuts, right? And maybe we get a lot of talk about tariffs, maybe some tariffs as well.
Yeah.
But it's not like we didn't have tariffs over the last 4 years.
Right.
Right. In a lot of ways, the Biden administration was just as tough, if not maybe even tougher towards Chinese companies, things like that, than the prior Trump administration. So I think with respect to tariffs, things are once companies know what's coming, they can adapt, right? I don't think that's a huge deal. It's just a matter of figuring out, okay, when does it come, how much there is. But I think all the conversation for the next 3 to 6 months is really about tax cuts. We are going to get tax cuts. It's just a matter of how much. And tax cuts is more deficit spending. More deficit spending is not bad for stocks. It's a good environment for stocks. You and I have been talking about this for a long time. What's unlikely to change after the election, right? Remember,
a bull market. We're still in a bull market either way.
We're still in a bull market, right? What's unlikely to change? More deficits with tax cuts. Defense spending is likely to continue rising, and the U.S. dollar is likely to remain strong.
Yeah, I mean, again, we are recording this the morning after. Small caps are absolutely soaring. Mid caps are soaring. You've got some of the more cyclical areas that are doing well. Believe me, everything's higher this morning after. Some cryptocurrencies are higher. You do have oil. Price of oil down a little bit. Is potentially more drilling going to come in there. But the reality again is, stuff I like to look at. Right, we had a really good year. Throw the election out for a second here. When the S&P 500 is up 17.5% for the year going into November, so that's like a really, really good year going into November. It's happened 14 times. The month of November has been higher, 12 of them. The month of December has been higher, 11 out of 14. And if you look at those 2 months combined, Sonu, the rest of the year, so the final 2 months are higher, 14 out of 14 times, up about 6% on average. So we're not ignoring the election. Believe me, it's important. But there are a lot of things that we've been talking about for a while that, listen, how the election shakes out is how election shakes out. The Fed is dovish, right? The Fed is cutting. By the time you at least listen to this, the Fed's probably going to have a cut. We have record earnings. Our price is a little bit high, or evaluation a little high. Yeah, in some areas, when you look at small and mid caps and cyclical areas, they're not that high. It's a high price tech names. And hey, that's where the growth is coming from. Sometimes you got to pay up for that. So the reality is, again, this is a bull market. We're hitting all-time highs. Literally every, assuming we hit an all-time high the day we're recording this Wednesday, which looks pretty promising. We've hit an all-time high every single month this year, except for the months that start with A. I don't know, make that up. April and August didn't hit any all-time highs, but all the rest of the months did. It's a bull market. I mean, so a couple more minutes here. Let's talk inflation, because I know I've got TV on here, right? They're talking about, well, tariffs are inflationary. I'll be honest, last time President Trump was in office 4 years ago, was it really that inflationary? I don't know. I don't think so. But what's your take on inflationary and tariffs?
With inflation, I think a good way to look at it is, look, we have a lot of disinflationary momentum in inflation, mostly because shelter inflation, things like that.
Yeah.
But I'm literally looking at my screen. I see the price of oil down 2.7%.
Yeah.
WTI, crude oil, is down to $70 a barrel. That is not an environment that is inflationary, which is not to say there could not be inflation in the future. But right now, we got a lot of disinflationary momentum, right? And that gets to another tailwind. So you mentioned a few tailwinds for the markets, right? You got momentum coming in. We got positive seasonality, which is November, December, January tends to be good. Now, post-election, as volatility comes down, I think that's another tailwind for markets. And then because inflation's low and the labor market is looking, I don't want to say it's looking shaky, because it's not shaky. It's in a good place, right? It's healthy, but it's cooling off. So the Federal Reserve is going to cut. That's yet another tailwind. Cut interest rates, I should say, right? They're going to cut interest rates. Maybe not as much as we expected before, but they will still cut. because I still think policy is too tight relative to where inflation is. That their mandate is not growth, their mandate is inflation. That's okay. And maximum employment. And they are looking to cut off risk to that employment picture. They will continue cutting. That's a tailwind for equities again.
Oh, absolutely. So, I mean, we've hit about the 5 minute mark here. The reality, again, the election is over. Markets do not like uncertainty. We heard for a while. Maybe the results go on for a while. We don't have results. And over president, we have, back and forth, but it doesn't look like that's the case, right? I mean, so the certainty, the election is over.
Mhm.
And the reality is, again, there are a lot of tailwinds that are still out there that suggest to us there's no recession on the horizon. The Fed is still a tailwind, and we are still in a bull market. So, with all of that, everyone, the election's over. We can start thinking about midterms here. Not quite yet. Let's take a break, everyone. Let's take a break. And we'll be back next week to talk about whatever's in the news next week. But this is, again, your latest Carson Take 5. We have a new president. See everyone next week. Thank you.